Ladies and gentlemen, thank you for standing by and welcome to the credit webinar. This is Charlie and I'm the moderator of this event. Pengyuan International is a global credit rating agency based in Hong Kong that has been licensed to provide credit rating services to an international client base since 2012. We use our global ratings and credit research to fill the gap between the Chinese credit and the global market. Following several years of administrative curbs on financing and operating activities, China's local government financing vehicles are back. Their operations are accelerating because they play outsized role in helping spark economic momentum as China begins to normalize following the COVID-19 lockdown. With us today, we have Brian Lam, the Director of Corporate Ratings from Pengyuan International to discuss about perspectives on LGFVs in China. Before we start the sharing, I would like to cover a few housekeeping notes. Today's webinar is being recorded. There's a webinar playback link will be available on our official website after the event is complete. All participants are on a listen mode only during the call of the webinar. Please note that the content in this webinar is not a credit rating action. It also does not constitute a recommendation to buy, sell, or any securities, etc. And after the presentation, there will be a Q&A section. For any questions for the speaker, please type your questions at any time in a Q&A box on the bottom right-hand corner. Our speaker will discuss in Q&A section at the end of the event. At this time, I'm going to hand the floor over to Brian. Brian, over to you.
Okay, thank you. Hi, good afternoon, everyone. Thank you for joining today's webinar. I'm Brian Lam. I am the Director of Corporate Rating in Pengyuan International, and I'm also responsible for the credit rating of LGFV in China. So I would like to start with today's presentation with a broad overview of China's LGFV bond market and then its issuance year to date and why you shouldn't ignore these sectors before we go into the details of different business models of LGFVs and its challenges. Then we will discuss the factors that could make up high credit worthiness of LGFVs. And lastly, we will end the webinar with Q&A sessions. So within the onshore bond market, so China maintained two distinctive submarkets: the exchange-traded bond market, which is regulated by the China Securities Regulation Commissions, CSRC, and the interbank bond market, which is regulated by the People's Bank of China. So total issuance for these two markets combined has expanded threefold over the last 5 years. So driven mainly by the government-related issuers. So out of all the subsegments, we can see that from the chart, the LG bonds grew the fastest. It grew by 20 times over the last 5 years. Also, LGFV bonds has also become one of the major segments with total bond issuance outstandings over 10 trillion at the end of July. Okay. So we expect to see a record high of LGFV bond issuance this year. For the first 9 months, LGFV bonds issuance reached 3 trillion RMB. Okay. Earlier this month, actually, the states launched these 3 red lines guidelines for the property developers. So basically, it's a guideline that limits the property developers with certain leverage levels and liquidities to not to issue bonds. So we think it might have an impact on the sales of lands, especially in the lower tier cities in China, so that those LGFVs in the lower tier cities will have to issue bonds to fill up the shortfalls of declines and in the land sales. So as a result, we expect the LGFV bonds to reach a record height of 4 trillion by end of the year. And on the right-hand side of the chart, it shows an increasing proportions of bonds with durations of 5 years or less, while the durations of 10 years above is actually shrinking. So the shorter durations of issuance can be explained by our view that the current local government will need to hold accountable for the LGFV bond issued during their terms. So in essence, the states are more cautious when granting the bond issues for the local government. Okay. So I think this is the overview of the bond market year to date. So let's get into different business models of LGFVs and its future development. So what actually are LGFVs? So there are lots of controversies in the market. While actually, I don't think the market has a consensus to define what LGFV is. But then actually, the State Council, they actually publish in one of its documents. So from the bottom of the slides, it's the exact wordings in Chinese, the Chinese exact wordings. So how the State Councils define the LGFV. So basically, we can conclude four very important criteria. The first one is they have to be set up and owned by the local government or its related department. So be it the local government itself, or the SESET, the local SESET, or the local Ministry of Finance, for example. The secondly, it needs to provide public services. So as an extensions of the government functions. I think this is where the controversy comes in. So different investor or different people have different views on what actually is the public welfare services. The third one is it should not be profit-seeking and therefore require the continuous government supports and subsidies. So and then the fourth one is the financing functions. So the LGFV have to prove that it need to finance to conduct the government works. So to qualify as an LGFV. Okay. So what kind of business do LGFVs typically involve in? I have summarized here 6 types of typical LGFV business with an emphasis on infrastructure constructions and primary land development. This is because actually there are narrower definitions of LGFVs, which only recognize infrastructures and primary land developments. And then there are also a broader definitions of LGFVs, which recognize affordable housing, transportation, public utilities, and culture and tourism, etc. So basically, the higher the percentage of the business that the company involved in this public wealth services, so the higher the nature of the LGFV that they have. Okay, let's look at the business model of LGFV one by one. The first one is the typical infrastructure constructions. So infrastructure constructions typically consist of roads and bridges, sometimes water conservancies, sometimes they constructed hospital parks. Those are like mostly the public facilities. So in terms of contract types, in the construction industries, they have BT, build and transfer. And then for BT business, we would say it typically have a buyback agreement with the government with payback period around 2 to 3 years. And then BOT and PPP business usually have a very long-term buyback or long-term payback period of more than 10 years, sometimes 20 years. So that's why if an LGFV engage in BOT or PPP, I believe their cash flow or the balance sheet would be like more leveraged than solely BT business models. Okay, and then the last the fourth one would be the EPC business. So EPC business is the safest in terms of cash flow volatilities. although it has a very low margins. But it usually doesn't have any cash flow issues because the government pay back the company or LGFV like in as according to the revenue recognitions. The last one would be the self-owned project. So for the self-owned project, if the assets are treated as self-owned project, so it almost have no cash flow. So, but the good thing is we don't get to see this kind of contract a lot for LGFVs. So I guess the key things for these sectors is to identify who is the true owners or who is the true sponsors of the project. If it's from the government, then I'll say it's a very typical LGFV business. Okay. Now let's go to the second one, primary land development. So what is primary land development? So it is a process of transforming raw land into cultivated or developed land where the houses to be built on can be like ready to be equipped with gas, electricity, water, or telecommunication, etc. So since the process also involves the relocation and settlement of the residents, the inventory turnover is very low and sometimes, or most of the times, very capital intensive. So, and then on the completion of the land development, so the developed cultivated land will be transferred to the government or land reserve bureau, going through this bidding, auction and public listing process. So after that, the government will pay back the LGFV, usually cover its cost of land development plus prefix premium. So in that case, if the process is going through bidding, auction, and public listings, the risk depends on the property market at the same times. Then the second business model is the repurchase agreement at a prefix rate, prefix premiums. So if it's a repurchase agreement, the risk lies with the government's financial capabilities. So we definitely, for LGFV to qualify as a higher credit worthiness, we definitely want to see more repurchase agreement types of land development rather than public listing and auction types. Okay, the third one, the business model is affordable housing. It is actually also one of the very common types of LGFV business. So the company can sell the finished housing product to the market directly. So that's what we call the direct sales to the market at a discount price. Or also the company can also sign a repurchase agreement with a prefix a premium. So similarly, to qualify as a high credit worthiness of LGFV, we want to see the repurchase agreement with the government. So basically, it's a guarantee repurchase rather than you need to expose to the housing market or property market at the time. And then general contracting. So the third business model is general contracting. General contracting is very similar to the ENCs. So basically, the LGFV does not expose to any risks. It's just like you can treat general contracting as EPC construction types. So, but we do not get to see a lot. We see less and less of the general contracting types in the affordable housing segment right now. So on the left-hand side, we have 4 different kind of affordable housing. So there's the public rental housing, low rental housing, price cap housing, or shantytown redevelopment projects. So these are the very common types of housing products for the LGFVs affordable housing. Okay, no. Then we will move on to transportations. Okay, this asset type is very tricky, I would say. Transportation assets usually offer very stable cash flow during their operating stage. And the first two, I say urban rail transit or subway, right? And then the railway are among the different transportation assets. We see the URT, the urban rail transit, and the railways having very high business linkage with the local governments. As the said asset basically help to solve the traffic congestions, the air pollutions in the urban areas, and it also can help to boost the property market nearby the train stations, actually, along the train stations. So although it has a very long payback period as well, but it's very stable. But then for the highway and waterway, this is where we need to be very careful. I would say if they are purely in operating stage, and because all the sources of revenues are from the general public, it might not be, it might have a very loose relationship with the government. Actually, we have seen a lot of total companies listed in Hong Kong. Those are definitely SOEs rather than the LGFVs. So for highway or waterway assets, we want to see they are also engaged in the, still continuing engaged in the construction of highway or waterways. If not, if it's solely operationals, I would say it might not be have a very strong LGFV natures. Okay, and then we go to public utilities. Okay, so some business usually some public utility business are actually very profitable. So even they sometimes might record losses. The loss is very minimal if compared to the size of LGFVs, maybe like a few hundred millions. So for those losses can also usually be compensated by the government subsidies if we can see from the non-operating income in the P&L. So from that perspective, I would say the public utility business is pretty positive. However, it usually also have a very long payback period and sometimes, and also we also need to notice that sometimes the LGFV will form a joint ventures with the listed companies like China Gas, etc., which is listed companies. So they form the JV with the listco, and so if they form the JV with the listco, I would say they are basically profit seeking. So we might check it as credit neutral, as the as you we know the listcos are usually aimed for profit taking, right? Okay. So last but not the least is the cultural tourism. So cultural tourism usually business usually refers to the construction and operation of scenic areas in the cities or in the province. So they may also involve in the land development and resettlement stage, which is quite positive, I would say, if they are involved in the resettlement and development. If not, if they're only like involved in the operations of the scenic areas, I would say it's not pretty positive. So actually, we have seen some provincial LGFV that engaged in the cultural tourism business has a very low credit rating, even lower than the municipal, like traditional LGFV. Okay. So here on the right side of this chart, I have summarized the 6 most common types of business that the LGFV engage in. With the infrastructure construction and primary land belongs to the very narrow definitions of LGFV. And then the rest, including the reservoir, we found the broader definitions of LGFVs. But then LGFV has been going through a lot of business conversions. They are now like more and more LGFVs are doing commercialized business, as we also summarize here on the left-hand side of the chart. So this is because given the slow, very long payback period of the public service business, So LGFVs are engaged in commercialized activities for two reasons. The first is obviously profit seeking to compensate the losses from the other public service areas. And then the second one, I would say it might probably because of they want to do some window dressings in P&L and balance sheet. So, for example, revenues of the LGFVs that just start engaging in commodity trading business, usually like they could double up year on year, but then with no incremental or of actual profits. Property development here, it's actually a very lucrative business with gross margin usually above 20% and 30%. So this is the most common types of commercialized business for LGFV. This is because LGFV usually has advantage in getting cheap or low cost land within the city if it's government background. Okay. So we can see that there are a lot of similarities here in E&E and in E&C constructions and also property development if you compare to say infrastructure construction and affordable housings. So basically they are doing very similar things. So why do we have to, how can we differentiate whether it is a public welfare services or whether it is a commercialized business expansions? I think the key idea is it's not what they do matters, it's who sponsor the project matters, who actually pay for this project that matters. So we want like the government to pay for these projects instead of someone from outside the cities. Okay, so this is another chart for the development trend. We have to just go through the business conversions. So what we have talking about is that LGFVs is going through this business conversion from the public services to the commercialized business. So for LGFV, we do not want to see commercial operations that account for probably like more than 50% of each revenue or profits or assets. So it's if the commercialized business that it's more than half, then we should really think about whether it can still deserve the LGFV status. Okay, and for the asset injections, and it's also LGFV also usually or typically try to deleverage its balance sheet through the asset injections. So when they have asset injections, we want to see whether this injected assets they have a controlling stake on whether the LGFV have controlling stake on the injected assets. If just a passive investment, I would say it might not be an LGFV natures, because to qualify as a LGFV nature business, you need to have a control over the business. And then we want to see those injected assets fall into the 6 public service category business that we talked about earlier. Okay? And then another frequent move for the LGFV these days are the consolidation and debt restructurings. So sometimes 2 LGFV or 3 LGFVs will consolidate and form a bigger companies, so that they have it's easier for them to move around the resources. So actually for 2018 and to 2019, we have seen more like city level or professional level LGFV going through the consolidations and restructuring. But for this year, for 2020, and we have seen more and more county levels LGFV having those consolidation and debt restructurings. So we might be seeing, well, as a result, I guess we might be seeing more issuance from the county level or lower tier government levels of LGFVs. So the last one is the bond swap program. So bond swap program, okay, it's in fact just aimed at replacing the bank credits previously incurred by the LGFV with local government bonds that are like less costly and have a longer maturities. So it aims to roll over parts of their debt, but also lower their interest rate costs. Okay, so let's go to the factors that will constitute high creditworthiness of LGFVs. The first one is the ownership structures. So it's obviously, okay, we want it to be directly owned by the local government. So if the entity is indirectly owned, then we believe the support, the government support will be weakened if it's not directly owned by the local government. And then the second one is the administrative level of the shareholders. Administrative level means whether it's a provincial LGFVs, whether it's a municipal or city level LGFVs, or whether it's a county level LGFVs, or it could even be like park management committees, that very low level LGFVs. So of course, the higher the level of the government administrative level, so the higher the creditworthiness of the LGFV, right? So the third point we would need to consider is the shareholder functions within the government. So the shareholder could be the local government itself, or the local finance bureau, or the local assets. So we've seen some investors or questions about which types of government functions do you prefer to qualify as a high creditworthiness of LGFVs? Well, I guess there is no strict answers, but usually for local assets, a lot of SOEs are also owned by local assets. So if it's owned by local assets, you need to identify, or going through the process to identify whether it's a true LGFV or not. If it's owned by the finance bureau, because a lot of government support or the cash support, they are actually from the finance bureau. So if it's directly owned by the finance bureau, I would say might be the LGFV can have easier access to the resources. So if it's owned by the local government itself, the LGFV will know like exactly what the policies is going through within the cities. Okay. So the second one, let me go back to the having quick analysis on the traditional business models. So as we have emphasized over and over again, so these two, infrastructure construction and primary land development, are the two most traditional kind of business that LGFV originally engaged in when they were set up like in the 19th centuries. For infrastructure constructions, so we want to see whether the capital fund is provided by the government or provided by the LGFVs. So if it's provided by the LGFVs, so we'll consider how the LGFV raise the capital funds and how the government compensate the issuer's financial costs. Basically, we want to see some support from the income statements to prove that they are LGFVs. Okay. And then for the primary land development, there are 2 points I would like to share. The first one is how the land is monetized. So if the land is monetized through the bidding, auction, and listings, the risk of this business lies in the pace in which the land is monetized. So the fund will be first entered into the designated financial account and then be returned to an LGFV with the market being the counterparties. So if the land is monetized through the government repurchase, as we previously talked about, the revenue of the LGFV land transfer should be part of the government fund expenses. Okay. And then the second point is the liquidity of land assets. So to assess the liquidity of land assets, we consider whether land certificates are available, because sometimes even though the LGFVs recorded land asset in its asset in its balance sheets, they don't usually have. Sometimes they don't have the land certificates, so it's very difficult for them to monetize if they get into troubles. Also, we also consider whether the land is used for residential use or whether it's used for commercial, industrial use, or even agricultural purposes. So I will rank in the order of high liquidities. I would say residential and commercial land would be the most liquid one, and the agricultural usage would be the least liquid of land assets. Okay. So the third factors that could affect the creditworthiness of LGFV is the government arrears. So what is government arrears? Government arrears is basically the account receivables or the money owed by the local governments. So which was recorded in as account receivables or other receivables in LGFV's balance sheet. So typically LGFV's assets include three types of assets. The first one is those infrastructure construction assets, like we call SBT or BOT, etc. So infrastructure projects. The second one is from the land development, the land assets. And the third one is the government arrears. So among these three different kind of assets, we want to see higher percentage of government arrears because the receivable are basically monetized. But then if you want to monetize the infrastructure asset or land, it takes time. It also like exposed to the property market risk, etc. Right? Okay, and then we move to government support. So government support can be reflected by subsidy incomes in the income statement, as well as the capital injections, which reflected in the movement in equities from the balance sheet. So for subsidy incomes, it's recorded in the non-operating incomes in the income statement. So we want to see both the magnitude and the continuities of the incomes. So by magnitude, of course, the bigger the subsidy is, the higher the creditworthiness of the LGFVs. And then the continuity means we don't want to see some inconsistent or alternative years of subsidy incomes. We want to see every year they have a very stable incomes due to the losses of their operations of water supply or gas supply, etc. And then the second is the capital injections. The capital injection can be reflected in the paying capitals on capital reserve from the shareholders' equities. So there are two types of capital injections. The first one is the land injections. So as we talked about previously, I will prefer the land injection to be like residential or commercial, which is more liquid if it's a agricultural purpose land, or even like forest land. We actually see that before. So it's very, very hard for you to monetize the assets. And then the second one is the equity injections. The equity injections, we also want to make sure the injected assets, you have control over the injected assets. If you're not, like it's very unlikely that that injected asset is doing the LGFV business, right? Okay, the next one is the financials. So usually I would say financials for LGFV issuers is not that important, but we don't really put a lot of emphasis on the ratios, etc. But then we look at the revenue mix. So this is where the revenue mix will reflect what types of business of the LGFVs that are engaged in. So we want to see more proportions of the revenues are coming from the 6 categories of commercialized LGF of the public services LGFVs are doing. And the second financial terms I would like to put a focus on is the government subsidies in the non-operating incomes. So we usually compare the non-operating income to the net profits or the operating profits. So to see to what percentage of the non-operating income accounted for as a percentage of the total net profits. Cool. So the third one is the infrastructure BT project investment. This is also very common types of LGFV business. So they're usually we call it as inventories, while the EPC construction we call it as other receivables in the balance sheet. So during their I say if those projects like owners are actually the ultimate project owners are local governments. So during the financial distress, the LGFV can actually sell or sold back those assets back to the local government itself. Then we have the land asset from the primary land development. So it's usually we call it as inventory in the balance sheet. But then sometimes if it's injected land, then you might have to check whether it's in inventory or in intangible assets. Okay, the next one we have the credit facilities. Okay, so I think this is also quite obvious. So we want to okay. So the number of financial institutions that the company has relation with, of course, the higher number of the financial institutions, so means more diverse of the LGFVs bank facilities. So if there are fewer number of banks among the financial institutions, so maybe there are fewer low cost financing opportunities and therefore high risk for the companies. So for this, we want to see more banks or less trusts or like asset management types. So, and then the total line of credit is very important, but we also want to see some credit line by a single financial institutions, especially from a large bank. So. Okay. So last one is the try to assess the local government's credit. So I think this is not our focus today, but I also want to put this slide on what are the factors that we will consider when assessing the credit of the local government. So basically, it's the financial economic scales as well as the debt scales and governance and financial management and liquidity, etc. So I would say to assessing the credit rating of LGFVs, so both the linkage and also the government, the credit level of the local government is also important. Okay. So this chart shows four set of the budget that local governments manage. From there, we can see the tax accounted for very high proportions, as well as the land sales, the proceeds from the land sales also accounted for. From here, these are very typical city level local government have around 20% of the revenue from the sales of land. But for some lower tier city level, the percentage could go up to 50%, or even more than 50% of the revenues from the sales of land. So that's why I would say LGFV and the property market sometimes interrelated. Okay. And this chart just summarizes what we have been talking about. What are the characteristics that have an impact on the LGFVs. We have talked about the ownership structures. So we want the direct ownership. We want it to be from the local government. And then traditional business models. We talk about the infrastructure constructions as well as the primary land development. And we also want to see the high percentage of account receivables or other account receivables from the government. And government support is the non-operating income in the income statement, and as well as we look for records of government support. So financials, we talk about the mix of revenue mix to decide whether the business fall into the 6 categories of the LGFV natures we talk about. And then credit facilities, we want the credit from the large banks. And also we want very sufficient credit facilities for LGFVs. And then lastly, we talk about the local government credit also have a very strong impact on the overall credit ratings of LGFVs. Right? So this is a summary page. So here is a framework of Peng Yuan's rating framework for in assessing LGFV. So basically, our methodology or our belief that LGFV's ratings consist of 3 parts or 3 elements. The first one is the government's willingness of support. So how it depends on the ties with the government, the nature, the business nature of the LGFVs, and how importance of the business of the LGFV engage in as to the government. And the second factor is the local government itself, the capacity, the financial capacity of support. And the last one would be the standalone credit of LGFVs. So these are the 3 factors that have an impact on our LGFV assessment. Right? So this chart shows the rating range of the public finance sectors. So as we can see, as we move down to the lower tier city, lower tier governments, the rating range widened. The widest will be the LGFV. It could be from single B to an A categories. Right? While the provincial credit ratings or sovereign credit rating is very narrow, that A or AA range. Okay. So this chart shows the characteristics of what we have been talking about for LGFVs. So usually have a very high leverage ratios. So usually like the average LGFVs debt to asset are above 50 to 60%. And then they usually have a very tight liquidity if you factor into the capex as well as the refinancing needs. And then for ROAs, it's only 1 to 3%. It's a very low profitability or low return. And then, but however, if you look at the equity growth rate, it's at somewhere between 10 to 15%. This is actually from the asset injections of LGFVs. So although they have a very low profit, like very low ROA or ROE or etc., they still can record it like on average 10 to 15% of equity increment that is solely from the equity injections. So this can show like what the characteristics of the LGFVs. Okay. So this is the ratings, the provincial government ratings we have so far. We can see that like in the east and southeast coastal area of China, they usually have a higher credit rating than the central area of China. Okay, I guess that's the end of my presentations. I think we can open up the floor for Q&A.
Thanks, Brian, for the sharing. We will start the Q&A section now. And I see there are a few questions already. So the first question is about, since Brian has just mentioned the rating is based on the credit of local government and its nature of LGFV business, is local government's creditworthiness more important or LGFV's business linkage with government more important in evaluating LGFV's credit default risks?
Okay, so the question is, which one is more important? Like whether the credit of local government or the linkage or the business nature of the LGFVs? Well, I guess it depends on what the LGFVs are. Like, I mean, uh, whether it is a higher level local government LGFVs or whether it's a lower level government LGFVs. So I would say the higher level, the local government LGFVs, then more focus to be on the business linkage, what they do. For the lower level government LGFVs, then the credit rating will be largely depends on the credit of the local government. So high level government, I would say it is say the 31 province and the selective cities who are able to issue local government bonds. So basically, provincial LGFVs. So for provincial LGFVs, I think the linkage or business linkage the of the company is more important. Actually, we have seen some cultural tourism LGFVs of some province has a very low credit ratings than our typical city level LGFVs. But then if you goes to refer to the county level LGFV, it's definitely, I would say, the financial capability of that county is most important than the business nature of the LGFVs that engage in.
Thank you, Brian. We got another question. So it's about our recent onshore credit defaults incidents concern.
But yeah, whether it's a concern, I think it is an argument for a few years from now. People are expecting, or I'll say at least quite more and more people are expecting like there might be more and more LGFV defaults later on. So I think the State Council's article number 43 suggests that like from 2016 onwards, all the government funded projects will need to be financed by the municipal bonds and issued by the provincial governments. And then it will be included into the physical budgetary planning and then the public projects like with commercial viabilities, the government should like finance through those PPP going forward, while the LGFV should like shut down or consolidate or transform to commercialized business from 2016 onwards. But for 2016, it's already been like 4 years. We haven't, I would say the transformation stage, it's very slow and it also really takes time. A lot of local governments still needs to rely on the still need to rely on the LGFV for refinancing. So we don't see a systematic risk yet.
Thanks, Ryan. Someone asked special project-based bonds and LGFV bonds both are used to fund the infrastructure construction by the local government. They look alike in a lot of aspects. The question is, why should investor choose or invest one over the other? What are the differences?
Okay, so why should one choose LGFV or the local government special project bonds? Well, yes, it's true that there are a lot of similarities between the LGFV bonds and the special bond project, as like basically the proceeds from both bond issuance are used to finance the infrastructure projects. But then I guess the difference is the pricing mechanism first. LGFV is definitely market oriented. And then the yield spread is very large, it's very wide. It could be like previous slide that we have shown here. Okay. So we have shown here that like the yield spread could be like from here, like single B to A range, while the special project bonds, I would say they have a very narrower spread. Usually, typically the spread is between 25 to 40 basis point, while the LGFV bond spread, like it could be a lot, right? And then the second point is that the special project bond interest and principal payment are linked to the specific public project and managed through the government fund budget, while the LGFV bonds are usually the credit risk of LGFV bonds are usually higher than LG bonds because of the lack of the explicit guarantee from the local government. And then another things I can think of is the interest income. Interest income from the local government bonds or special project bonds are usually tax-free since 2018. I think China have the exemption on this. And then while the interest income on the LGFV bonds, basically you need to pay the tax. And then in terms of the choices in the market, because for the LG or special project bonds, like only 31 provinces and some 5 selected cities that can issue the bonds. So you have a very limited choices. But then those LG bonds usually have a longer maturity, like could be 10 years or even longer. But then for LGFVs, there are thousands of LGFVs issuing bonds in the onshore market. So you have a lot more choices, but then also a lot of different yields and risks out there. So it really depends on your risk appetite and as well as whether the maturity can meet into your expectations.
Thanks, Brian. Okay. So let's conclude now. Yeah, maybe we will explore further in this area in our future section. So if you have any additional questions or would like to connect directly with us, you can either reach out directly using the contact information on this slide. Please stay tuned to Pengyuan International newsletter and the upcoming events. So thanks everyone's interest for joining us today. We look forward to speaking with you again. Goodbye.